coming from church.
We're coming back, we are going home. Akatenda kukereke. Bononamata. Wane mupita.
Ore mampita.
Akasenga ndo kumsana.
What's happening, everybody? Here I come again with another video. So if this is your first time right here, please consider subscribing and like and share. Today, so I'm going to share with you the market analysis for this week, which means we are going to break down the market for this week, and I'm going to show you some trades which I'm looking at, and then the different pairs which I'm looking at. So without any further ado, let's get into it.
Every night, are we paradise?
So these are the trades that I'm looking at. I've got many pairs that I'm looking at. My strategy is a swing strategy that I use. So I look for many pairs so that I will find setups. Because if I just look for one pair, I will be only get one trade per month or 2 trades per month, because one trade just waiting for it to play out, or waiting for it to take the trade and then waiting for it to play it, it's gonna take sometimes it's gonna take 2 weeks, sometimes it's gonna take the whole month. So I just look for many playlists. This is GBP card. As you can see that the market is going up, and now the market is retracing back to our entry. I placed this buy limit position last week. As you can see that the market is breaking out, so I'm just waiting for the market to just reach that fair value gap on the 71% level, and then we wait for the trade to play out. But for now, you can see the market, the price is going bullish. This is another trade scenario that we are looking at, euro Japanese yen. As you can see that the market break out just here, and then it is I'm just waiting for the market to retrace a little bit so that I just pull my Fibonacci tool from left to right, so that I would just take the trade at the 71% level, where there is an order block and a fair value gap just right there. So this is another scenario that I will be looking at, but it will take maybe some weeks for it to play out, for it to retrace back right there, because one candlestick is 4 hours. So it's gonna take a lot of candles for it to come there. I don't want to see it just come with the 2 candles and then it will come right there. And then this is another scenario that I'm looking at. I can see that the market here is consolidating. There's no any scenario that will taking a trade right here, because the market is just consolidating. And then another setup right here, GBP JPY. We can see that the market is bullish right here, so we are looking at to take only buys. The market break structure right there, so we just pull the Fibonacci from the left. When it start reversing, we put it place a Fibonacci tool, so that we will be looking for a trade from the 71% level. This is another scenario that we are looking at this week to take the trade. As you know that the strategy is about planning the trade and trading the plan. So when we follow the system, when we follow our plan, that's when it will be called a system that is working, because we will be following our plan. We place a trade at 71% level, they take profit at 100% level, and then at 0% is our take profit. at 100% is our stop loss. We just set and forget. And then this is another bullish scenario that we are looking at. And then here, this last week, it just misses us with some pips right here. As you can see, it just misses us in some pips. It was supposed to take our TP, but as for now the trade is invalid. Let's delete the buy limit, and then let's go to another trade setup that we are looking at. As you can see that the market is bullish just right here because it was breaking structure to the top. So we take our Fibonacci 2 from the lower high to the higher high. That's where we'll be looking to take the trade at the 71% level, where there is a fair value gap, or else one of the smart money concepts like demand zone or break of fair value gap. Market changes structure, and then right there the market break the structure, and then we're just waiting for it to take our 71% level, and then our will be on this buy. But it will take a long time for us to reach the TP level, so we'll just set and forget, and it's gonna take another some weeks. And then another scenario just right here, we are looking to buy euro Australian dollar. There's a fair value gap which is aligning with our 71% level, and then the market took the liquidity there at the bottom. It break the structure up, and then there is an inducement right there. So this is a high probability trade that we're gonna win it, so we will just take it right at the fair value gap. And then another trade scenario here, that I'm in this trade, but I'm not seeing it going up to our TP because it is showing some reversal chart patterns. As you know that price action also is the king. So I use in my strategy, I use also price action to see if the market is going into my direction. Yeah, the market was bullish. It was breaking the structure, creating lower highs and lower and the higher highs. But as for now, I can see that the market has got created a right shoulder and left shoulder and the head, which is a reversal pattern. So the market gonna go down right here from right here. So this trade I will just wait for the market to open, and then I will take the profit for this trade. And then another trade right here, US dollar Swiss franc. Also this trade is showing some reversal chart patterns, even though it was bullish, and then everything, it aligns with everything. They take the liquidity sweep, and then it break the structure, and then right there we've got a fair value gap, and then the market reaches our 71% level. But as of price action, this market is looking like it want to retrace and then to reverse back to become bearish. I'm just waiting for it to break that low, and then we're just looking for the bearish market. And then here is another trade scenario which I are looking at. As you can see that the market has reached our 71% level, so I'm just waiting for the market to open, and then we are going to just press a sell limit, sell by market price just right here, and then take profit at the 0%, and then stop loss at the 100%, just like that. And then we will just wait for the market to play what it is gonna do right here on card JPY. This is the trade we are looking at to take when the market open. Price took the fair value gap. There's a fair value gap right there, so the price reaches the 71% level, but there was a fair value gap on top of that area, so the market decides to reverse back just to take that liquidity, so that it will balance the market, and then it will go down. So here another scenario, here we have got a reversal pattern, reversal trade. As you can see that the market broke structure just right here, and then it changes character. It was bullish, now it is becoming bearish. So we are just checking to take the trade at the 71% level, as it aligns with our fair value gap. It is crucial that you identify when the market reaches a 71% level, if it is aligning with your fair value gap, so it will become a high probability trade. So just we are going to take this trade as it is a high probability trade for a sell. We just place our sell limit at 71% level, and then our stop loss at 100%, and then our take profit at the lower low right there at 0%. So this is a high probability trade on GBP NZD. Another trade right here, as you can see, but the market is consolidating. Our strategy that does not consider there is no way that the market we can take a trade when the market is consolidating. We only take trades when the market is trending up or trending down, and then when it is consolidating, we just sit away and watch the market and wait for it to just start trending. And then we only take trades when the market is for the market continuation or the market reversal only. So just here we can see the market just broke the structure right there, but it didn't broke it with a lot of candles. It just broke it with one candle, which is not we want to do. And then we are seeing that the market is reversing right here. As you can see, the market changes character, and then it broke structure. So we will be looking to take this trade is a bearish structure, a US dollar, South African rands. As you can see, the market just broke structure right there, and we just put our Fibonacci 2 from the lower high to lower low, and then you can see that the 71% level will be aligning with the fair value gap, as the market change character and broke structure to the downside. And then we just pull our Fibonacci 2 right there. But here in this scenario, there is a fair value gap just on top of 71% level. So it is likely that the market will come there and clear the liquidity because there's a lot of liquidity that is sitting at our stop loss zone. So it is important that we can move our stop loss just to that high, so that we just take the trade at the 71% level. For us to be safe, we just put our trade right there, and then stop loss on top of that structure, so that we'll be on the safe side, and then our take profit at the lower. Right here, another scenario, the market is bullish, as we took this trade last week, and then it is running nicely into the profit, but it misses our TP right there, but it reverses, and then it is going up again to our TP. This trade took a lot of time. It ran through the whole week. It was running. As for now, we are just waiting for it to hit our TP. We just follow our rules. As our rules says, we just set the trade and we forget. Here is another trade on CHFJPY. As you can see that the market is bearish right here, but it is likely that the market is going to change character. As you can see that we have got a reversal chart pattern right here. I'm looking for the market to just change the character right here, so that we will place, then looking for only bullish structure. And then here on NZD card, the market has changed structure. It was bearish and now it is bullish, as it changed structure right then with high momentum to the upside. So we will just pull our Fibonacci 2 from the lower low to higher high. So this is a reversal trade. As you can see that we have got imbalance right here, or a fair value gap, which needs to be filled. The market will rebalance that right there, and then we'll pull our Fibonacci 2, and then we will be looking to take the trade from 71% when the market rebalances. As you can see that the DXY is changing structure right now. It was bullish, but as for now it is changing structure to the downside, and with high momentum or with a gap, uh, but that gap leaves a lot of imbalance that there. So the US dollar will reverse back to fill that gap, and then when it is reversing to fill that gap, on another pair like Euro USD, it will be also reversing to take our fib level and then took our trade. And then here on the XAU USD, you can see that the market have got changed character. Here it was bearish and then now it is bullish, but we are not going to take any trade right here. As you can see that we have got conflicts which are happening around the world, which will cause gold to be volatile, and then to that you're not able to predict the direction of it. It is just going weirdly up and down. So I'm not going to take the trades on gold right now. Ecclesiastes 11 verse 1 says, "Send your grain overseas, for 1 many days you will get a return." This just means we must invest in different portfolios. Divide your merchandise among 7 or even 8 investments, for you do not know what calamity may happen on earth. This just means we must not put our eggs on one basket. That's why we trade with the different portfolios, like gold funded trader, funded next, and then I've got my personal broker funds that I use. I use the broker Xness, and then I use Zedway as I'm starting to trade with Headway from now. I will recommend it once I withdraw for you guys. So let's subscribe. Let's do what is good.